Hello, and welcome to the Three Questions Podcast, where we dive deep into the world of wealth management and connect you with industry experts. I'm your host, Wayne Baxter, Senior Executive Manager at One Capital Management. If you or someone close to you owns a business that relies on technology, networks, or customer data, the rising threat of cyber incidents can feel overwhelming. If that's you, stay tuned. What's our topic this week? The 3 questions business owners should ask about preventing and mitigating cyber incidents. Thank you for taking time to check us out. And if you enjoyed this episode of the 3 Questions Podcast, please consider liking this video and subscribing to our podcast and YouTube channels. Businesses here in the US and around the world are facing unprecedented wave of cyber incidents. Ransomware attacks, supply chain breaches, and sophisticated social engineering schemes are happening with alarming frequency, often resulting in millions of dollars of losses, operational downtime, and reputational damage. At the same time, cyber insurance carriers have become much more selective, demanding stronger controls and documentation before they'll provide coverage. It's not an easy place to be. So today we're exploring the 3 questions business owners should ask about preventing and mitigating cyber incidents. And joining me on the podcast are 2 experts from Gallagher who work closely together on cyber risk management strategies. Kyle Merkel is the Area Vice President with Gallagher and is based in Woodland Hills, California, not far from me. And joining us from Chicago, Illinois, I think a noted Chicago Bears fan from last time I saw him, he's the Area Vice President for Risk Placement Services, Inc., which is a part of Gallagher. And what Kyle does is he brings a deep experience of helping business owners secure the right insurance and risk solution. And Zach specializes in developing practical cyber risk management strategies for their clients. And together, collectively, they guide companies through a complex, evolving world of cyber threats and insurance. Gentlemen, we made it happen. We get you on the podcast. A little bit of work behind the scenes to get us here, but thanks for making yourselves available.
Yeah, thanks for having us, Wayne. I think the only thing you forgot was that I'm the bigger Bears fan,
Oh, really?
even more so than Zach. But other than that, we're off to a good start.
Okay.
Yeah. Thanks, Wayne, for having us. Appreciate you on to discuss cyber.
Yeah. And well, I've been a Rams season ticket holder almost since they came back here. So we're the natural Hatfield and McCoys. Although I will admit one thing, I like your quarterback more than I like mine.
So do I.
Yeah.
This one. Yeah. It took us a couple drafts to get there.
Yeah, well, you got one. You got a winner now. But we'll see how this all unfolds. Anyway, on with the show, as they say. So before we get to our 3 questions, I want to set the stage here a little bit. So for business owners and this looming, and again, you guys did a presentation at my local Provisors group in Woodland Hills, and properly, it had everybody kind of, what's the word? Spooked would be
Yeah.
a little bit.
Sure.
So, which was, I'm sure, the intent. But for business owners, this risk of a cyber attacks, the stakes are really, really high, which you guys pointed out, by the way, very, very, very effectively. So one serious incident can threaten cash flow. I've heard stories about that. Example of a real estate business. They were completely wiped out because of one cyber incident. You have cash flow risk, you have client trust issues, and maybe the company itself, like I mentioned earlier. It was an escrow company, in fact, that basically one mistake and all their cash was gone. It was like over. So, what trends or challenges are you guys seeing right now in 2026 that's rattling everybody's pots and pans?
Yeah, I think I'll start. And unfortunately, Wayne, that's a story that we hear all too often, right? And I think like the easiest thing when you talk about cyber insurance is, if you have a fire at your house or your building, you call 911. You know what's going on, right? You have your property insurance.
Hopefully, yes.
Hopefully, in Southern California, I don't know what's going on these days, but in general, hopefully this is the process, right? If you show up to the office one day and, there's a ransomware event, right, where somebody is logging into their computer, but then they have skull and crossbones on their computer that says, we demand Bitcoin. I mean, what do you do? Because I know Zach has seen that situation several times, and it's the situation where who do you call? What if you have cyber insurance? What if you don't? And so ransomware is something that we're seeing frequently. Social engineering and phishing, even from incidents, probably like you were discussing, where somebody may change their email by one letter and then say, "Hey, I'm the new banker. Please send the $20,000 check." If they do not have the right controls in place, that's sent and gone, and that money's nowhere to be found. So that's a couple things we're seeing right now. And then I'd say the final piece is it's all industries. You would think it's these technology or healthcare where we call it PII, personal identifiable information, but they'll come after the manufacturers. They'll even go after small businesses because the thought is they may not invest as much in the IT and the infrastructure behind the scenes to protect the data.
Anything you want to add to that, Zach?
Yeah, I'll add to it. Kyle hit it right in the head. I mean, the biggest challenge is the trends that we're seeing is claims. We're seeing claims every day. I get a social engineering notice. One of our clients sent the wrong money. Ransomware claims are still on the rise. They're a little less frequent than social engineering claims, but they're the high severity claims. As Kyle mentioned, it's just not your big targets. It's a lot of small nonprofits, and then it's schools, it's across the board, and then it's third-party vendors where we have our clients are giving their data to a third-party vendor, and the bad actors are going after those vendors. Within the last week, there was another large vendor breach that all they do is education. So all schools, universities, they give them the information, and they were breached as of it was last Friday. And so we're seeing those on a daily basis. And those are the mass events that are going to cause the insurance companies to pay out more and more in claims because they have multiple policies exposed.
You know what? Before I move on, I just for the folks listening, you use the term social engineering. Now this is for you, like the obvious, but for someone listening on the podcast, whether they're anywhere here in the United States, in fact, I even have an audience in Canada too. Can you give me an example of what social engineering actually is?
I'll break it down to the simplest of terms. Is ultimately when there's a bad actor, they could be in your network, or they could just be trying to send an invoice and say, they know you as a vendor, and they say, "Hey, we changed our account number." And what they do is they spoof the email address where it looks exactly like yours, where they may change one letter. And so it looks like
or add a hyphen or
add a hyphen. And they're even combined letters that make it look like Microsoft. You combine an R and an N, and if you look quickly, it looks like Microsoft. So it's coming from them, and they're saying they'll send it to a secretary. They'll send it to somebody and say, "Hey, we just changed our routing number, our bank number. Here's the new numbers. Here's where to send payment." And a lot of times in the secretary, what they'll do is, or CFO, anybody that gets this, they ultimately want to pay it. And what they'll do is they'll send it on like a weekend, or they'll send it on a rush. So it's like, "Oh, we just need to get this done. We're past due." And then the client just pays the bad actor, and poof, the money is gone.
So that's a perfect example of social engineering. And I think everybody has seen it or been aware of it, and it can happen at any level. So today we're discussing the 3 questions business owners should ask about preventing and mitigating cyber incidents. And gentlemen, let's get right to our questions. Question number 1. I'm a food manufacturer in the Central Valley of California. My production, inventory, and distribution systems are tightly integrated with network technology. And as a result, my business is increasingly exposed to cyber risks. What do I need to do to ensure that I qualify? This is a key. What do I need to do to qualify for cyber insurance coverage? Kyle, take it away.
Yeah, so I think in the last couple of years, the standards have really increased that Zach could speak to, but it is no longer where, hey, I fill out a quick app, it's a 1 page, and then I get a quote back, right? That is no longer the process, similar to writing property in these high hazard brush zones. You need a lot that goes into the story to not only get good pricing, but to even get quotes nowadays. So we always have a checklist that we like to share with clients as far as, hey, these are some proactive controls that you should utilize. Most of our clients will have somebody, hopefully in IT, especially in the middle market, that knows what they're doing. But we also will always refer business to a third party outside IT consultant who will tell them, hey, this is what you need. So some things are going to be offsite backups if you're hacked. It's going to be MFA. And just for anyone listening, MFA, multi-factor authentication. I mean, anytime you log into your Chase bank account or your Salesforce CRM, you get a ping on your cell phone to approve it's really you. Even though it's annoying, those are the things that you have to have, even as a startup business, to get cyber right now.
Right. Okay. So for manufacturing operation like the one we just discussed, are there any industry specific risks, or even beyond that, any best practices that business owners should prioritize? So first things first, do they have any specific risks that they need to worry about?
The largest risk for a manufacturer, they don't have a lot of PII, like Kyle mentioned. They're not carrying a lot of information. The largest risk for them is business interruption. So it caused by a ransomware attack. We'll say, as Kyle says, you get the skull and crossbones, that you're not able to log in. Are you able to still sell your product? But are you able to manufacture your product? So I've had manufacturing clients that are down for 3 days. I've also had manufacturing clients that have been down for 3 months. And it all depends on the size of your revenue, how much you make daily. Where I've seen a few of my clients where they may have like a $500,000 cyber claim. It's not not small, but not large, to pay for the notification, to pay for the forensics. After a year and a half of figuring out how much business they were lost, the claims can range from $3 to $5 million.
I was going to say,
you need above that. It depends if you're, it's, not as bad if you're $100 million manufacturer, but if you make, $400, $500 million a year and you're down for 3 months, those numbers add up quickly.
I'm thinking about renewals. If you're in the renewal process, how far in advance should business owners start working on these improvements? They can be, so am I lined up properly here? Like, how far, like, is there a sort of a rule of thumb on that part? Like if you have, you're got your cyber insurance in place, like you're already set up, but it's coming up for renewal process. How far in advance will the insurance company want to see these improvements made before they'll be comfortable with giving you a competitive quote?
Yeah, I think first thing to look at when you talk about insurance renewals is just proactive behavior and communication, right? At the end of the day, I think it's the communication and working ahead of time, because we have so many markets that we work with, but the best success, to go back to football and Nick Saban, the best teams, the best results come from the best process, right? Over time. And so typically for us, that process looks like, hey, 120 days out, we're going to meet, we're going to go over any recommendations. Here's what the market is doing as far as, is it up, is it down, is it flat, just to help you budget and to continue to update you throughout the year. Then at about 90 days, we're going to ask you and your IT team to complete the application, update anything that we need. And then at about 75 to 60 days, Zach and his team get it out to the marketplace for us, and they will go to, say there's 50 markets that these guys have. They're going to then limit it down to, okay, Wayne's business is in financial services. This is approximately how much revenue, asset, XYZ. Then they're going to limit it to about 5 markets, and then they'll get you the quote. Typically, we aim for about 2 to 3 weeks before the renewal. So there's plenty of time to go through our marketing process and what happened and what led to those prices.
But a 90-day runway would be the minimum you'd want.
Yeah. I mean, from an insurance perspective, you have no idea how much business we've won when there's just a broker that's lazy and gives renewals about 2 days before, right? That just leaves a bad taste in everyone's mouth.
No
right?
kidding. Wow.
Yeah. And then I'll add to that, if it's 2 days before and you have to make changes, there's, implement security, implement training, there's no time to do
impossible.
that.
It's impossible.
And I'll add to it, it's, making improvements. You should always be evaluating your cybersecurity all year long, because how fast technology moves, especially with AI. Just because at the renewal before you met the requirements, you should always, what we bring as we review about 60 to 75 days, we're reviewing the application, what you've changed. And you should always be growing. Understand that for a small business, sometimes pricing, sometimes cost is the value, but very quickly you can have a breach and be out of business, as you mentioned before, Wayne.
So, don't want to throw you up under the bridge or on the spot here, but what the heck? So do clients come to you guys and say, look, are there things that we're not doing that we should be doing? Like, are you guys actually able to kind of lead the way here on any of this, or how does that interaction work between you and your clients?
I would say from a cyber perspective, I would rely on somebody like Zach, who's going to work with the underwriter on a day in and day out basis and say, these are the controls in place. Here's we're putting out quarterly market updates at Gallagher,
Right,
just as
right,
leader.
exactly.
This is where claims are coming from. But I would say, just from like a good hygiene and good practices perspective, we're always trying to do at least an annual review with our clients and say because to me, people with insurance want to know, am I overinsured? Am I underinsured? How do my rates compare? And if we move deductibles, what does that do to my price? I've never met anyone that thinks they're paying too little in insurance, right? So but how do we show with data and analytics to show, why we support what we do in 2026? And these guys, when they've seen these claims, he's getting a claim every single day. He can say, based off other food manufacturers of 25 to 50 million, they're buying X amount of limits. So we're proactive in that process.
Good. Okay, so our topic today is the 3 questions business owners should ask about preventing and mitigating cyber incidents. And joining me on the podcast are 2 experts from Gallagher who work closely together on cyber risk management strategies. Kyle Merkel, who's an area vice president with Gallagher here in Woodland Hills, California. And joining us from Chicago is Zach Kramer. He's an area vice president with Risk Placement Services, which is a part of Gallagher. Gentlemen, let's move on to question number 2. Here we go. One of my friends recently told me about a social engineering incident at their company. I've heard that I can purchase insurance for my furniture manufacturing business to protect against that. How does it work? Zach, since you're the guru here, I'm going to turn it over to you.
Yeah, so there's not such thing as a standalone social engineering policy. It is part of we call a cyber insurance policy, and it's an insuring agreement in the cyber insurance policy. And
is it like a rider? Is it kind of like a rider, Zach? Would it be?
It depends on the insurance carrier. That's the thing with cyber. It's such a new coverage. It's not like property that's been around for years and years. It's a newer coverage. Part of the issue with cyber is every insurance carrier calls it something different. Social engineering can be called cyber deception. So it could be endorsed on or a rider, as you mentioned, or it could be a part of the insuring agreements as well. So that's what makes it confusing, and you should always bring in a cyber broker that's an expert in the space, because just because you have cyber doesn't mean you have the correct cyber policy placed. And with social engineering, let's say you have $1 million limit on your policy. Most of the time, social engineering is sublimited to $250,000. And this is just because of what we mentioned on the top of the show, is the amount of losses. I see social engineering losses almost every day. It's the loss leader. Insurance carriers are sublimiting to, say, 250 grand to limit their exposures at the same time, which as brokers, we want to make sure we offer as much limit as possible. So we have some solutions to get higher social engineering, especially for companies like Wayne, you mentioned escrow agents. They transfer money all day long.
Yeah.
And is $250,000 enough for
that's a rounding error on a balance sheet.
Yeah.
And so it's something I recommend. It's sometimes depends on your business, could be costly, but I don't recommend a client that does not purchase it. And then with the cyber policy, Kyle mentioned earlier, they've got the 24-hour breach coach, that who to call. You don't know who to call, because sometimes they could be they just send an invoice and you send it. Other times the bad actor could be in your system watching. And just watching and waiting, and to the weekend, or as I mentioned earlier, somebody's on vacation, and then they'll strike. And then what also could happen is you could send the funds, but you could also have a business email compromise, and they steal your information as well. And most of the time, that would be up to full limits on the policy.
So the 250, that 250,000 limit, is that a standard, or can you get higher limits than the?
So I would say 80% of the insurance companies that we have right now offer 250 and 250 as a max. There's a lot of competition in the cyberspace right now. There's a lot of money going in. There's a lot of new entrants, and so some carriers are raising that to 500. But and that's probably the past 3 months. When they did this 4 or 5 years ago, it lasted for maybe a year, and then they started going back to the 250 because
One
of the
thing,
loss.
Well, go ahead,
Wayne,
Kyle. No, go ahead.
I just want to add one small thing that Zach just said. So I do a lot in the consumer product world, and there's a coverage called product recall coverage, right, which is very specialized coverage. And so in that space, there was an insurer that came in for a few years and offered a very nuanced coverage where they said there doesn't have to be potential for bodily injury or property damage for this to trigger. All the other insurers followed it. They didn't. So they wrote a lot of premium, but then what happens is they start taking claims that the other carriers wouldn't have paid out, and they just all left that carrier. So similar to Zach's point, where some people try to write premium and change the standards, which is great, and you take it while you can, but you just know they could get burned, and that could go way over time, right?
Yeah, this is when you get into cyber risk, you're out into the Wild West. There's no question. For owners concerned about both prevention and financial protection, I guess, how do you recommend balancing, purchasing insurance with internal controls? I mean, where you can't, I think the message I got here today so far is that you can't solely rely on just buying insurance as the way to solve everything. It seems to me like and at the other end, you can't. I guess the term we use a lot of times in the health case is self-insure. Like you don't want to try to like self-insure yourself by saying, "Wow, I don't really have to buy insurance because I've taken all these provisions." So there's got to be sort of a happy marriage here, a happy weighting of both.
You just took the words right out of my mouth. As I was prepping for this call, I thought the perfect analogy was just because you take care of yourself, you're younger, you're healthy, you eat well, you work out, you still probably want life insurance for your family, right? Or like maybe you've never had a grease fire in your kitchen, but you probably still want a fire extinguisher.
Yeah,
Just
exactly
in case,
right.
It's the exact same thing where how do we stack the cards in our favor as best as possible, understanding everything costs money, nothing is free. So who do we pay internally? Who's our external partner? And then at the end of the day, insurance is simply at the very bones, a contract that transfers risk from you
100%.
to the insurance company for premium. So then it's working with people like Gallagher and Zach and his team to say, hey, let us run a report and show you what other people are buying. And that way you can hopefully buy with a little more confidence, and we can model what potential losses would look like.
Okay, so I got one more question. Question number 3. Here we go. My company is in the process of going public. How do I know how much cyber insurance is appropriate? And just as a follow-up to that, before you address that question, how does going public change the risk profile and the insurance requirements for a company? They're doing the same thing. One's public, one's private. How does that mitigate things? So over to you guys.
Zach, I'll let you start off.
So for public companies, they have audited financials, they have reports, and they have everybody has shareholders, but they have public shareholders. So anytime there's a cyber breach, they have to disclose it right away. And some requirements for state requirements for notifications, as soon as practicable, as soon as, at 36 hours, which that's where the breach code comes. But once they figure that out, once you notify, then you have to notify your shareholders. And part of that with, it's a higher risk. You're also just a bigger name. You just don't go after, the bigger names, but sometimes it's a reputation risk, as you mentioned earlier, Wayne. So it's like helping understand what limits they need. And what we have a couple modeling tools that can help clients based on, the type of business, their financial size, their controls, that can model on, let's say, the total financial impact. We can model just based on a ransomware. We can model just on a social engineering, and help them really understand their risk and bring their understanding back to their board, who's ultimately going to make the decision on how much limit to buy.
So it's a bit more nuanced. So based on today's conversation, is there one practical step a business owner could take right now to strengthen their cyber risk posture? If there was one thing either of you would recommend a business owner should be doing right now to protect themselves, what would it be?
And two things. Here, I'll go first real quick. I got 2 things for you, Wayne. First, don't do it alone. Get an expert, either hire one or use an outside vendor. They're all over the place. Some are a lot better than others. And the second one is you got to train your employees. Just because you're the owner of the company and you say, I would never click on that link, it's obvious. What about the new employee that clicks on the phishing link, right? And
Mhm.
so then it's training
And it
them
can
on.
happen not just to a new employee, it could be an experienced employee that
Yeah,
just because it's welcome to the human race almost like, it can happen to anybody, can be deked out by what seemed to be the most obvious, and then you realize afterwards you've been had, right? It can happen. So training is really important. I agree with you on that one. Zach, you're
Yeah,
going to chime in. Sorry.
Kyle took the words out of my mouth on this one, actually. Employee training. I really think that's, over the past 4 or 5 years, we've gotten multi-factor authentication. We got endpoint detection. We've got all the controls from an IT infrastructure in place that where I've heard risk managers say, we will never have a breach. And then where I respond to that, as what Kyle just said, do you trust on every one of your employees not to click on a link? I don't. I don't. I don't. And so
I don't think it's
ultimately,
realistic. If you have a head count of 100 plus employees, I mean, the law of large, you guys are in the insurance business. The law of large numbers means
mm,
it's
yeah.
yeah.
inevitable.
I
And
also
then
think I also think just to kind of piggyback on that, it's not all the training costs money, right? Like a lot of the insurance carriers we partner with, Wayne, they will offer training because they don't want it,
They
right?
don't want
They want to
claims.
limit the
They
exposure. They
don't
don't want
want claims,
or,
right?
or Gallagher offers trainings as well. So Zach, I'm sorry to cut you off. I was just thinking of that because it's not always it costs more money, right? Sometimes it's what's the value that's already provided, but maybe we don't
Mhm.
know about.
Yep. A lot of insurance companies, they offer,
Yeah.
training, scans. They want to make you a better risk at the same time. And even outside of outside of insurance, there's plenty of companies that offer, $100 a year or less for per employee for phishing simulations. And then you can test your client, send out, did they click on the link? Then you can go have a conversation with them. You can do that. And then so one thing here, everybody, has MFA. If you're worried to say we have MFA, just Google something called MFA bombing and see if you believe in your controls at the end of the day.
Now, we are, I think ourselves, we are pretty locked down on all of that here. And, we have our own, our own internal, client services, websites where we go in. Everything is multi-factored, and you can only stay logged in for like 10 minutes at a time. If you're off too long, it shuts down. You got to go back and like
Mhm.
everything. And every time you have to go through this, we try everything we do to protect our information. But it's an ongoing thing. And the emails that you get have to be so careful. You have people impostering, big impostoring your clients and all of that. So you have
Mhm.
to be so careful. Okay, gentlemen, folks listening today, hopefully it didn't petrify two people too much, but for the ones that have been listening and they want more information on cyber insurance, what is the best way for them to contact you? Kyle, you go first. How if they want to get a hold of you? And I know even though you're in Southern California, you work with clients all over the United States, right? You don't have to be in the greater, you don't have to be in the San Fernando Valley, right? You can be anywhere around
Yeah.
the U.S.
Yeah, correct. Yeah, and actually all over the world. We have a full international team as well.
So
That
even my clients and colleagues in Canada could work with you with Gallagher.
That's right. Yeah, we have a Gallagher Canada as well. Best way to get in touch with me is either give me a call on my cell phone. We don't have a work phone for better or worse, so I'm always available. And then my
Can you give
email
us
as
a
well.
phone number? Because of people listening in, they can't. If people,
Yep,
we're on video, but we're also listening. People listen on Apple and
sure.
Spotify too. So, what's the number they
Six
can reach you at?
661-753-7557.
Perfect, and they can get you on what's your email address?
Kyle_Merkel, MERKEL @ajg.com.
Perfect. And Zach, if somebody wants to get a hold of one of the behind the scenes experts here, like yourself, how can they get a hold of you? What's the best way?
Yeah, you can give me a ring. I do have a desk phone, but it rings to my mobile as well. So it's 312-803-5989. And
Perfect.
then my email address is Zach, ZACH _ Kramer, KRAMER @rpsins.com.
Perfect. Look, guys, first of all, you did a great job. at our provisors meeting, where Zach, by the way, has a really important responsibility there. He is the social chair. He's the guy who tries to round us all up and get us to go to offsite events. And I think you're batting over 500 now on this.
I think so. Yeah, it was the young blood in the group. I got suckered into it, but I love it.
I think we're getting together for coffee here in the not too distant future. I recall we're supposed to.
That's right. That's right.
I think I'm actually going to be able to make it. I'm not going to be in Florida, so hopefully I'll be there. So, gentlemen, thank you both of you for coming on today to the podcast. This was really good. Great information. Again, Kyle Merkel is an area vice president with Gallagher. He's located in Woodland Hills, California, and San Fernando Valley. And Zach joined us from Chicago. He is the area vice president for Risk Placement Services, Inc. Gentlemen, thank you so much, and we'll keep in touch. Thank you very much. Take care.
Thanks, Wayne.
I look forward to bringing you the Three Questions podcast. I hope you find them educational and informative. Please consider liking this video and subscribing to our podcast and YouTube channels. And to receive notification of when our latest episode has been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and we will see you soon.